All right, let's kick off with technology and loan recovery. Nigerians are facing high cost of living. They're taking out more loans from friends and family, also using loan apps. And because of higher inflation and higher cost of living, a lot of them are not able to pay those loans back. So there is a business opportunity for loan recovery and using technology in order to recover those loans. But with the higher cost of living, does it mean that a number of people are not able to pay those loans back? And what does that mean for that particular business model? We're happy to be joined by Chukwudiebele Enyi, who is the COO, that's Chief Operating Officer, and co-founder of BFREE. He joins us now to discuss. Good morning to you, sir. Thanks for being with us. So, the business opportunity, where did you see it in terms of saying, okay, we're going to go into, you and your co-founders are going to go into the business of recovering loans?
Okay, so we used to work with some of the biggest fintech companies in Nigeria. Some of them pay fair money. And during the pandemic, we have grown the business to a point where, we're lending at an astronomical level. And we discovered that, there were a lot of people who were defaulting. And, yes, we could try outsourcing to call centers, outsourcing to other recovery agencies, but we discovered that none of them had a tailored approach to these customers. Not one customer defaulted for the same reason. Some of them defaulted for they lost their jobs, some were sick, businesses were affected, or some of them just simple budgeting issues. So we decided to say, okay, how can we do if we create a system whereby each customer's tailored needs and the reason why they defaulted could be calculated into how we help them to repay back their loan. And that was how we came about the idea of BFREE. And we started in 2020 during the COVID pandemic, and we've been working now for the past 4 years.
These are micro loans, yes? What's the typical size?
So the typical size from 3,000 to 1 million, depending on the lender. So for the banks, the amount are a lot more higher. With the digital lenders, they do between 3,000 to 50 to 100,000 naira. Now, non-collateralized, none of them have any collateral.
Right, and that's where the issues is. The issues are because there's no collateral. Now, sometimes you buy the bad loans off of the creditors.
Yes.
So what do you get it? Do they give you a discount for that in order to take that full risk?
Oh, okay. So yeah, absolutely, right. What we decided to do was develop a model where we work with the discounted cash flow value of that non-performing asset. So we look at, okay, how much will you be able to projectedly recover in 1 year, in 2 years? Why don't I just give you this at a little bit of discount, looking at inflation rate and the cost of money and cost of lending over time. So we look at it and we do that discounted cash flow. We present it to the lenders. If they accept it, and we buy those books. And this gives us an opportunity to be a lot more flexible with the customers, with the defaulters, because we are not under the pressure that the lenders are under. So we can take a long-term approach to getting them to repay back their loan.
Yeah, taking me back to my finance classes of discounted cash flow models in Excel. But that means your inflation inputs from 2020 till now, putting that in is going to impact the DCF model. Yeah. What regulatory authority do you fall under?
So because we operate in 3 markets, Nigeria, Kenya, and Ghana. So depending on the market, Ghana, we have the Bank of Ghana, the CBK in Kenya, and the CBN in Nigeria. We depend on the model also. In Ghana and Kenya, you really don't need the license to be able to provide debt factoring. Or you just need an approval from the regulator. Here in Nigeria, you need a license, but if we go through a sub-participation approach, then we don't need a license for that.
How do you use, and we're going to get into data now and our databases and so on and so forth. Well, how does technology factor in when you're trying to contact these people that have the bad loans and in order to retrieve them?
Okay, so thank you very much. So, as we talked about initially, these values are small values. They are non-collateralized, right?
Yeah.
So it doesn't make sense to take anybody to court because of 5,000 naira. You can't bully them. It just doesn't make any sense, right? So what we decided to do was to create, so how in marketing, where you tell your friends that I want to travel tomorrow, and all of a sudden you are seeing Wakana app on your ad on your phone. Yeah. So we decided to create a system where we use that marketing intelligence to say, okay, if we use the data and this technology to understand these customers, understand how much they earn, understand what are their monthly bill cycle, our system will be able to accurately predict how much this person will be able to repay month on month. As against just call them, you are only 100,000 naira, pay now. Someone who has not paid for 1 year, for 2 years will not pay, right? But with the data and technology, we're able to accurately understand how much this person can actually afford on a more sustainable level, and we now build on that hypothesis to get them to repayment.
Okay, but there's been a whole lot of, we talk a lot about Nigeria's, fractured database, BVN here, NIA. I know they're trying to merge everything together. How have you been able to navigate those hurdles with the data the data issues?
Yeah, so for us as a business, mostly we operate in 3 markets. We are very, very particular about also data privacy and data management. In all the 3 markets we operate in, we are data processors. We are registered and licensed data processors in those markets. Now, Nigeria has made tremendous strides in the past 4-5 years. I've been in tech for quite a long while, and signing the law from NDPR to NDPC now, where we now have an organization that is specifically given the mandate to actually provide the security to Nigeria's data, has been tremendous. And which is, now we are now seeing other markets like our Kenya market and Ghana market now trying to copy what Nigeria is doing right now, which is tremendous. We are making progress. Now, that being said, what we are seeing in the next 3 to 4 years will be the merging of data amongst fintech players, amongst the banks, amongst the telcos. Right now, we have this data all in silos, right? So, to be honest, we can build a beautiful line of fit, seeing the behavior of everybody in Nigeria. But because they're in silos, so what will happen is that lender A can borrow from the bank and go to lender B and borrow because they are not sharing data. Now, the credit bureau have been coming gradually to cover this ground. And to be honest, kudos to them. Now, credit score is now beginning to become a thing now. Nigerians gradually were educating them that, look, at your credit score is very important. It can give you the opportunity to take more loans. So we believe that in the next 3-5 years, all this data will be merged together and we'll actually be able to tell a beautiful story.
I'm glad. Look, we need to get to a point where your credit score is good enough for you to put a down payment on a house or a down payment on a car or take a loan to travel, whatever. That's really where we need to get to. And it's good to have seen that improvement. Yes. So you started in 2020, right? Yes. We're now in 2024. You've seen, we're talking about the discounted cash flow models and putting in inflation in that Excel sheet and how things turned out. With the higher cost of living, has the loan recovery process become even tougher simply because many more Nigerians are facing harder times? So what's been the trend for you?
So the trend for us, basically, we've seen over time is, as the economy is getting tighter, yes, repayment of loan is being pushed to the back burner, right? And one thing we've also tried to also, even the moment we discuss with our clients, and we're trying to also educate people, is loan recovery is like you are fighting for pocket share, basically, right? The way the FMCG people will look at it, that, what products can I take that will take 1 naira to the pocket? It's the same way we try to see, people paying back their loan. We try to teach them budgeting. So, okay, you can budget this, and, you'll be able to put some money aside to repay back their loan. Now, if you look at economies like US, for example, US have been offering consumer loan for the past 60 years with the advent of credit card and all that. But people see default, right? Yep. These are massive economies. So, yes, there's a sort of like a positive correlation between a tighter economy and default on loan repayment, but it is not the full story in the sense that there are very numerous reasons why people default on loans. So yes, we are seeing a little bit of spike, but there's also a rebound in the sense that the moment people get any little livelihood, and you are able to get them to prioritize repaying back their loan because you've been able to convince them, they sort of repaying the little ability that they can pay.
Well, now there's a bit of psychology here. There's a bit of behavioral trends. What are you noticing about people and bad debts? Is it mostly falling on hard times, or they have a gambling addiction, or what? What are you noticing?
So there's something we've built our algorithm around, which is called the capability to repay and the ability to repay metrics, right? So we see that customers fall into 2 categories. There are some who have the money to repay. There are some who don't have the money to pay. There are some who want to pay, and there are some who don't want to pay. Now, these metrics now sort of goes. So what our system tries to do is, number 1, try to identify where do these customers fall into. And from our data over the past 4 years, what we've seen is most customers are willing to pay, but they don't have the ability to pay, right? So, you see them, business, they lose their job. A lot of them are sick. We don't have a social security net in Africa yet. Right. So once the breadwinner is sick, it sort of goes down and cascades and affects everything. So as we are seeing the pattern right now, we are seeing that there are more and more people who have the willingness to repay, but they don't have the capability. So this is where we now put up repayment plan for them, because we understand these customers. Yeah. With our data, we actually can accurately sort of track their cash flow. I was okay, since you can't pay this 100,000 naira, we believe you can pay 5,000 naira every 2 weeks, 5,000 every month. and we spread it over a period of time, and before you know, they get to full repayment.
All right, my final question for you. Do you need a struggling economy to be in business? Because, if the economy gets better and there are more jobs and people get wealthy and they're able to pay off their loans, then do you now have to pay? What happens?
Okay, so to be honest, we get asked this question every time, right? Some people even see us as like the casket seller.
All right.
Yeah, it's only when people die you make money. But the truth is that even when people are healthy, people still die, right? The economy is good, the economy is not good. People will still default on their loan. Trust me, a lot of time people default on their loan. It's just a simple issue of budgeting. They just deprioritize the loan.
Right.
They get some money, they get a good job. All of a sudden they're thinking, there's this girl I want to impress. Let me just leave this loan for a while. Let me go and flex the boys, right?
Oh, I think I've been there.
So all of a sudden you deprioritize paying back that loan. So good economy and no good economy, we are here for the long run, right? And that's why we have now said, okay, let's take it a step further. Let's be able to provide liquidity for the lenders, right? Instead of keeping these bad debt on your balance book, is there as a toxic loan, we can take the risk off your neck, buy it off you, give you the money up front, and we try to
restructure the loan. You chase the defaulters.
Yeah, so
great conversation. Chukwudiebele Enyi, COO and co-founder of BFREE. Thank you so much for your time.
It's a pleasure. Thank you.